Well, I am encouraged. Obviously, the markets are encouraged today. And the bottom line is nobody's really paying attention to the economic numbers. They're looking at death tolls and new cases. And that's how they're trying to determine when the economy can get back up and running again. So it certainly would be extremely encouraging news if we see that flattening of the curve. Today, we have some evidence that perhaps we're near the peak. And as long as investors believe that there's a good chance that the economy people will get back to work in another month or maybe 6 weeks, then I think we could go higher. I think we've seen the bottoms. But if this takes a turn for the worse, and I think it's too early to tell, but if it does take a turn for the worse, and investors begin to believe that it's going to take another 2 months or even longer before people go back to work, then we will test those lows of March 23rd.
All right. Tyler?
Kelly, good to see you, and welcome, everybody. We had a little trouble with the shot here from my home, but I'm with you now. Brian Jacobsen, why don't you react to what Vahan just said? And specifically, what if things do not come back all that quickly? It isn't a snapback.
Well, that is one of the dangers, is that if you do get a resumption of economic activity, is what does that actually look like? What is that path to recovery? It's obviously been a very abrupt slowdown. You can liken it to being like we're going through an economic winter at the moment. The key question is whether or not this has become an economic ice age, where it's going to last multiple quarters, and then what does that thawing of conditions look like? Our best guess is that it's going to probably look very unique, very unusual. We've seen in the past snapbacks in economic activity from recessions. We've seen long trudges higher. So we're really positioning portfolios for kind of that more sawtooth pattern, just because there is a risk that if you get economic activity resumed too quickly, you could get a bounce back in terms of the number of infections if there isn't a vaccine in place. So it is very conditional as to whether or not when they resume activity, is there a vaccine in place? And that likely isn't going to happen for a while.
No, I think that's one of the things that people all worry about, as whether there's going to be either some breakthrough therapeutically or in terms of a vaccination. Brian, I guess one of the things that I worry about economically is the return of the consumer and the consumer's willingness to get out of their houses and go out and gather and spend and do the things that they did. Consumer, it's an article of faith that it's 2/3 or more of the American economy. And if that doesn't snap back quickly, not only either because people don't have jobs or because they're just gun shy about going out and spending, that could really slow things down, even if the virus is largely recumbent within a few months.
Yeah, you're absolutely right that is a risk. However, the consumer is going to do what the consumer does best, which is consume. Thankfully, it seems like the policy response has been proportionate to the problem, as far as expanded unemployment benefits, sending out checks to households to maybe prop up consumption. But there's not a lot to spend it on right now if you can't go out to various businesses. So I think that consumers are going to consume. It's just going to be in a different way. And that's the way that a lot of our equity portfolio managers are trying to figure out, is exactly how will consumer consume, what will that look like going forward? We're going to probably get that bounce back. It's just what will they actually spend it on?
Vahan, energy has been hardest hit among all the sectors, basically. Is it time to start nibbling at energy stocks? And if so, which ones?
Yeah, I think it is time. And of course, energy has been hit for a long time, even before the coronavirus started to spread. But if you are a long-term investor, then I think it would be time to start adding some energy stocks to your portfolio. And this is a bit of a contrarian point of view, because the way I'm thinking about it is that right now we're in a world where we have a glut of oil and not enough demand. So I could see, for example, a scenario where companies start shutting in production, the economy then starts coming along, and then all of a sudden inventories get drawn down and the price of oil goes up. I don't think that'll happen for at least another year, but I can see that scenario. So it would make sense, in my opinion, to add those stocks. And the safe way to play it is to add the large integrated companies, perhaps the Exxons and the Chevrons. But if you want to take a little bit more risk, You can add a stock like Murphy Oil, which is a exploration and production company.